Welcome to the latest Motley Fool Scoreboard. I'm Anand, Chokkavelu, and we've got longtime fools, Dan Caplinger and Matt Frankel, giving a 1 to 10 rating to the biggest industrial REIT in the world. It's Prologis, ticker symbol PLD. It's one I've owned for about a year now, since it got a whopping 8.5 last time. Talk about the business first, including factors like industry and competition. A 10 is invincible. A 1 is hopeless. Both of you are at an 8. What do you have to say, Matt?
Yeah, so Anand, you actually kind of downplayed how big this business is. It's actually the biggest real estate company of any kind in the world. It's a massive REIT. It's larger than all of its publicly traded competitors combined. Only a handful of REITs have A-rated credit. Its size definitely helps with that. Just for example, it issued about $1.5 billion worth of $1.5 billion worth of debt in the latest quarter at a 3.5% interest rate. I couldn't borrow money at 3.5% right now. Most companies couldn't. It's a massive competitive advantage when it comes to trying to grow in a difficult market. However, because of the interest rate environment, a lot of commercial property values have really declined, and industrial is no exception. They've been hit pretty hard, and that property type was just overbuilt during the pandemic years, and it's really causing a little bit of vacancy concern, which is why I didn't give it any more than an 8.
Federal government can't even borrow 3.5% these days, so that's a win for Prologis. But yeah, I gave it an 8 as well. I think that the onshoring trends that we've seen, that I think we're going to continue to see that it's going to build some momentum. That may support further investment in infrastructure that should lead to some higher valuations for real estate and should be supportive for the business overall.
I can't even fathom the scale of Prologis. I think Matt was talking about it, where once you get over 1 billion square feet is just, I think in thousands of square feet like homes, and I kind of multiply that out. Management, a 10 is Warren Buffett, a 1 is Homer Simpson. Dan's at a 7. Matt, you're at a 9.
Yeah, Prologis, it is being a founder-led REIT is actually kind of rare just in and of itself. And Prologis is still led by one of its co-founders. I'm not going to disrespect the man by trying to pronounce his name because I'm going to get it wrong. I'll do it. Hamid Moghadam, who he's built the business into like a massive powerhouse. He's done a great job of handling in a terrible environment. Yes, the stock has underperformed the market, but it's been a really bad environment, and he's adjusted well to it. They've been quietly adding data centers to the company's strategic plan, maybe sensing that the industrial is kind of maybe built out for the time being, but really a good job in a tough environment.
I think that my 7 is based less on the relative performance inside the industry and more just kind of across the entire stock universe, which may be unfair. Prologis has done a good job of outperforming its peers from a stock market perspective. It's lagging the overall market considerably. I'm a little bit, they've done reasonably well starting to move into data centers. I just question whether maybe they were doing it and just not making a big enough noise about it. And so I didn't realize it until recently, but it feels a little bit late. And so there are other companies in the real estate investment trust space that I think have concentrated more on that. And for those who are interested in that segment in particular, those might make superior investments.
Someone with a hard to pronounce name myself. I appreciate that Matt gave an effort on the CEO. I won't leave him to dry. I'll try to. Hamid Moghadam.
I was close to that.
Yeah, well, I don't know. I don't know if I'm right. Hopefully somewhere in between our pronunciations is the right answer. Financials, a 10 is a fortress, a 1 is yikes. Matt's at a 9. Dan, you're right behind with an 8.
There's not much to find fault with here. Everybody, you need to understand, looking at real estate investment trust, that there's a different set of it's the same financial statements, but it's different metrics that you're looking at. And so just be careful when you're looking at numbers. Things like based on, traditional P/E doesn't really work that well for REITs. Very little to find fault with. And I like the fact that the REIT has done a good disciplined job of investing in growth without overextending.
Yeah, I mean, I already mentioned the stellar credit that they have, their borrowing costs being so much less than even the U.S. government. It's a highly profitable company. As Dan mentioned, there's a lot of different metrics. I'm not going to go into a lesson on how REIT financials work. Excellent balance sheet, about 25% debt to total capitalization. Most REITs are a lot more than that. REITs generally use borrowed money, just the way you or I would use a mortgage to buy a home. And Prologis has over $7 billion of liquidity that should really help it take advantage of opportunities while the market's down. I can see them becoming more of an acquirer than a developer as some of its peers start to see vacancies drop.
Dan, let's move on to valuation. How well will Prologis' stock do over the next 5 years, and how safe is it? 10's a sure thing, 1's a lottery ticket.
I gave it a 5 to 10% return expectation with safety score of 6. I think where Matt and it's less about the company and more about the macroeconomic environment. I'm not convinced that we've seen interest rates top out yet. There are some things that kind of trouble me with that. In addition, I think we're still seeing the real estate market evolve. We've got back to work is kind of coming in. It should be a support to real estate values commercially. But if artificial intelligence gets us to the point where companies are employing fewer people, fewer employees means less space, question becomes, how does that ripple down into areas like industrial space? And obviously on the AI front, if you end up replacing industrial space with data center space, that just takes execution. Execution requires, a consideration on safety, and that's where the 6 comes from.
I said 10 to 15% total returns over the next 5 years with an 8 safety score. Dan's right that AI will replace could replace some types of industrial properties. But one of Prologis' key focus is logistics properties like warehouses, those giant Amazon distribution centers. I don't see any world where e-commerce becomes less prevalent over the next 5 years, no matter what AI does. So the space just for that will be needed. Commercial real estate values are tied to the interest rate environment, so I could see my 10 to 15% was more of a rebound call than anything else. That it will kind of rebound from poor stock performance over the past few years as rates fall. The opposite could be true from the trend we saw. I mentioned property values went down significantly over the past couple of years from interest rates. We can see property values go up. We can see occupancy trends really reverse course as the market kind of finds equilibrium. Dan mentioned the onshoring trend. And their CEO says he does see an inflection point. He's mentioned it a few times and reiterated it just recently in the industrial real estate space this year.
Let's move on to everyone's favorite topic. Dan, is there a company in Prologis' space that you like more?
I lean a little bit towards Equinix, ticker EQIX. It's much more of a data center specialist. It's more expensive from a valuation standpoint. I just think for good or ill, data center investment is going to be the hot area in real estate for the next several years. Everybody's going to jump on the AI bandwagon. I think that growth-oriented investors might find Equinix a little bit more attractive here. Albeit, I do think that there's a good opportunity for Prologis to get more into data centers and potentially even amp up its own growth rate.
Yeah, I'm a Prologis shareholder, and I've added to my position several times already this year. It's one that I kind of considered a value play over the past couple of years and built the position in. Digital Realty is very similar to Equinix in terms of the data center play, and it's one that I've owned for over a decade too. So you can make an argument either way on which one's the best play.
Thank you to both Matt and to Dan. They've given Prologis an overall score of 7.6 out of 10. That's short of the 8.0 that would force me to own shares. But as I mentioned before, I already own them because Prologis got an 8.5 the first time we did it. For the record, I chalked the score difference up to just normal variance of different panelists. Matt Argersinger was one of the prior panelists, and he's been pretty consistently bullish on Prologis, much as the other Matt Frankel, has been. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is a Moneyball stock. Till then, Fool on.
Yeah, that's just me being typically hyperbolic about describing it, but it is very helpful.